So next segment is the preview for the European Central Bank's decision for October 2016. So a bit of a background. Last time we had the rate decision back in September. This decision was accompanied by forecasts and sort of a bigger decision. This time it's an intermediate decision, no new forecast, so no changes are expected. Last time what happened is that Mario Draghi, the president of the ECB, hinted about changes to QE, the QE program, the bond buying program, the money printing program, if you wish, of the ECB is expected to end in March, and it's getting closer. He didn't provide any details. The markets expect the ECB to extend the program beyond March 2017, even though the ECB doesn't have too many assets to buy. Okay. Since then, we had a contradicting report, taper talk. We had a report that QE might end. Okay, that we might have beginning in March, we might have the ECB beginning to taper bond buys from 80 billion a month. They're going to tick it down to 70, 60, 50, like the Fed did, until they finally end the program. That means scaling back, even tightening, if you wish, okay? But this was categorically denied, and it seemed like more of a theoretical idea. Once the ECB decides to stop the QE program, it'll change the dosage in order not to shock the patient, okay? But doesn't mean that it'll happen in March. Doesn't mean it'll happen now. That doesn't mean that the ECB is ready to do it. So in October, we might get, hopefully, more details about that, but it isn't sure at all, okay? So this will be a focus of the event. What else did happen since September? Inflation remains low, so oil prices, their base effect is diminishing, so headline inflation moved up to 0.4%, but core inflation remains stuck at 0.8%. That means real inflation, real growth is still very much of a problem in the Eurozone. There is high uncertainty from Brexit. Remember, hard Brexit is also hard Brexit for the European Central Bank, for the Eurozone. On the other hand, Germany is doing well, and employment continues falling. Business confidence looks quite high. So that's the background upon which the ECB makes its decision. What can we expect tomorrow in the ECB's rate decision? Of course, no change, no new forecasts. We might get a hint for December. What do they intend to do in December? Scale down on QE, change the parameters, or extend it? And that's quite of an open question. Another question we'll get from reporters about the scarcity of bonds. Remember, the ECB is limited to bond buying, buying bonds with the minimum yield of its negative deposit rate, minus 0.4%. And some bonds have even lower yields, so they're not eligible for ECB buying. So there might be scarcity of bonds. Will the ECB begin tapering, as aforementioned, and the Italian referendum in early December regarding constitutional changes? Draghi might be asked about that because he's Italian, but will probably deflect any questions about that. Okay, same with questions about Greece, and it'll be interesting to see if they can offer anything new. In recent ECB events, we had we had Mario Draghi calling on governments to do more structural reforms and fiscal stimulus. So far, it fell on deaf ears. Okay, and what about markets? What about the euro? So any hints that QE is about to end, that they're going to begin tapering in March, is euro bullish, because no more printing of money or a gradual removal of this medicine, okay? But if they're going to extend it even forever, like the Fed did with QE3 before they announced tapering, it's of course bearish for the euro. I think that my baseline scenario is that no news means more uncertainty, and it means a weaker euro. And that could be good for Draghi, because Draghi wants a weaker euro. This pushes inflation higher, helps exports, and at this point, he wants more uncertainty. That has been the line in the past few months. So that's my baseline scenario. More uncertainty, a weaker euro. Remember that the euro is more dependent on the Fed and on Brexit. So all the talk of hard Brexit also hurt the euro, and the talk from the Fed that they intend to raise rates in December is pushing the dollar higher. These two events from Britain and from the US had a stronger effect on euro dollar than any euro-related event. Can Draghi steal the attention like he did in the past? Possibly. I think he'll strive for more uncertainty and show us the cards only in December after the US elections, after he has more time to convince the members of probably extending QE. But at the moment, we don't really know what they intend to do. Okay, so that's the ECB preview. Let's see if we have any questions. No questions. So let's continue to the next segment.